Hey everyone, Couch Investor back to another video for today. So we're starting the day with a very interesting earnings report by General Motors. They reported a double beat, so beat on earnings per share estimates and on revenue as well, which is something that they usually do, so nothing really special there. There are some positive signs in the earnings report. There are still some negative signs as well. Overall, I think it's a pretty neutral one, not a very bad one like the doomsday people say that, oh, General Motors is going out of business. I don't think so. Now let's start off with some comments with regards to the electric vehicle sales. So in the EV market, they met their target to produce 50,000 EVs in North America in the first half of the year. With both cell and vehicle production increasing, we continue to target production of roughly 100,000 EVs in the second half of this year and will grow from there. At the same time, we are focused on strong cost discipline and we're taking steps to lower our capital spending. By the way, they also declared a small dividend, 0.9% yield there. Not a lot, but hey, you'll take what you can get, I guess. Then when it comes to the Q2 highlights, so EBIT adjusted of $3.2 billion, adjusted auto free cash flow of $5.5 billion. They are raising the full year guidance for the second consecutive quarter. They say they earned number one ranking on GD Power initial quality study for the second consecutive year, and they expanded their number one position in total sales, truck sales, and fleet and commercial sales in the United States. More on that later on. Then they talk about a launch of GM Envolve, new customer experience, new vehicles extend our lead in fleet and commercial markets. Again, lots of slides here talking about new vehicles that will coming out, older vehicles, their performance, prices, etc., etc. Again, the future is very promising when you look at the electric vehicle market. And then they announced this, the Cadillac Escalade IQ, the brand's first ever all-electric full-size SUV. The Escalade IQ represents the reinvention of Cadillac's most iconic nameplate. Remains to be seen how much this costs. Then with regards to Cruise, you can see here the exponential growth. So they reached their third million driverless miles in just 49 days, nearly 2 times faster than the second million. They are doing 10,000 rides a week, recently hit 390 driverless AVs running concurrently across all operating cities. First million driverless miles safety report shows 54% fewer collisions overall versus human drivers in a comparable driving environment. Again, this is geofenced, not like Tesla, for example. There was approximately 15 monthly decrease in cost per mile for the last 6 months, led by optimization in infrastructure, process improvements, and automation. They are targeting cost below $1 per mile. Again, data is king here, and it's nice to see that they are growing exponentially. Then, when we look at the guidance, so they raised it. Now they're expecting $12 to $14 billion in EBIT adjusted, previously $11 to $13 billion. 7.5 to 8.5 EPS adjusted from $6.35 to $7.35. And then adjusted auto free cash flow between $7 to $9 billion. Previously was $5.5 to $7.5 billion, so quite nice there. And of course, the KPIs here remain a bit unchanged. Revenue is expected to reach $225 billion plus in 2025, so a 12% CAGR there. General Motors North America EBIT adjusted margins of between 8 to 10% through 2025. Total capital spending of between $11 to $13 billion per year through 2025, and 2024 and 5 are under review. When we look at EV, they're expecting EV revenue of over $50 billion in 2025, 400,000 EV production units from 2022 to first half of 2024, and a capacity of approximately 1 million units in North America by 2025, an EV portfolio at a low to mid single digit EBIT profit margin in 2025, and this includes GHG benefits, software revenue, and after sales revenue, and excludes clean energy tax credits. And the last thing here, which is subject to raw material changes, cell cost of approximately $87 per kilowatt hour by 2025. So I would say so far so good, right? I think a lot of people, especially in the Tesla community, would probably think that GM is deteriorating as a business, but I think they're holding up quite well right now. Of course, there's still a long way to go, but currently you cannot say that this is a bad report. So let's dive a little bit deeper. If you're enjoying this type of video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's have a look at the market share. So total worldwide market share for this quarter reached 7.4%. In the last 6 months, 7.2%, which is better than last quarter. Last quarter, they were sitting at 6.9%. Now, when we look at United States, you look at trucks, they also regained a little bit of market share there, not a lot. Last quarter was 29.9%. This quarter sits at 30%. But if you look at total United States market share, they're now at 16.3%. Last quarter was 16.4%. Again, not a big change, but it is, I think, the second consecutive quarter that the market share has come down. And then lastly, when you look at China, 8.6% there compared to 9.5% a year ago, and last quarter was 9%. So the market share in China keeps going down. Now, if we look at global deliveries in the United States and in Canada, we can see a nice little re-increase here from Q1 to Q2, because previously Q4 to Q1 was a bit down. Same thing with China, we can see an increase there. So global deliveries in GM markets have increased. Now, here again, what's the impact towards the US dealerships? And so we can see here US dealership inventory. This is of course for North America. Last time we checked, Q3 to Q4 was very, very big. The difference there, then Q4 to Q1, flat-ish, but you can see now a reacceleration here, Q1 to Q2, and by the way, a reacceleration is not really positive in this aspect. So while vehicles are being shipped away from GM, they are landing at US dealerships. And then whatever happens next remains to be seen. Prices can go up, prices can go down. We don't really have that much data the moment the car gets into the dealership. Then last thing here, the overall business, so net sales and revenue. Again, we can look at the three things: automotive, cruise, and GM Financial. With cruise, it's again flat-ish, 26 million, 25 million. Last year, nothing much has changed. If we look at income before income taxes, so looking at the core business, if we remove, let's say, cruise, because it is really not that substantial, we can see that the core business is doing much better today than 1 year ago. And this is, of course, despite the fact that operating income for GM Financial is less this year than last year. And there is an explanation for that as well. If we look at GM Financials, you can see it right here from Q2 2022, 29.2% down to 19.3%. They say here the results are down year over year, driven by lower net leased vehicles income and higher interest expense, partially offset by loan portfolio growth and higher effective yields. Of course, GM Financial is a big part of the overall GM business. Of course, not as big as the automotive part, but it is part of their business, a bit of like the equivalent, let's say, of Tesla Energy. In my opinion, Tesla Energy will grow much faster than GM Financial, but just so we get a small comparison. So to conclude, I think a pretty neutral report when it comes to GM. Of course, they had a double beat, but if you look at the history of their reports, a double beat for them is not that special. They are always setting the bar pretty low-ish, so they get there and they can even beat. Of course, we have now second consecutive quarter that they're raising full-year guidance, so they're seeing some positive momentum there. It's pretty good for the overall EV market, overall car market as well, but with interest rates remaining quite high, and on Wednesday it might even go higher. Remains to be seen what happens throughout the year with regards to the overall car market. So overall, that's about it. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.